Last Thursday, NVIDIA dropped earnings, ripped 5% at the open, and dragged the entire AI basket with it. And then everything got smoked. NVIDIA closed down 3.2%. The S&P 500 and NASDAQ 100 both rolled over hard, giving back all its early gains. As the major US indexes sank, one thing resurfaced fast: fear that the AI boom is turning into the next tech bubble. In today's video, we're breaking down this sell-off, exposing what's real and what's hype inside the AI trade, and mapping out where AI stocks could eventually go next. Now, this one's a long one, so hit save right now. If you want my deep dive on NVIDIA, you can go and watch my last episode. I'm Grant, and I blew up a 650K trading account in 2022 and rebuilt myself from zero. I cut through Wall Street BS and tell you what the institutions want. So let's get started. NVIDIA's Q3 2025 earnings dropped on November 19th and revenue was up 62%. Market ripped at the open. Then reality kicked the door down. The optimism didn't last. By the close, S&P 500 down 1.6%, the Dow Jones down 0.8%, NASDAQ Composite down 2.2%, NVIDIA down 3.2%, but the VIX was up at 8%. The entire chip sector, well, that's already down 11% in November, on track for the worst month since 2022. AMD and ARM both got obliterated by 20%. Why? Because the AI skepticism isn't just a couple of stocks anymore, it's bleeding into everything. Now, companies are throwing billions into chips, data centers, training clusters, and high-risk expansion plans. Investors, well, they're questioning, are these valuations real or just another hype cycle? And the price action reflects that fear. Meta is down 21% since its October 29 earnings because of insane CapEx. Microsoft dropped 30% on earnings day for the exact same reason, and companies with weaker balance sheets straight up massacred. Now, CoreWeave collapsed 46% this month, Oracle is down 24% and heading for its worst monthly drop since 2001. Now, we've had one of the longest bull markets in decades. Valuations are stretched. Fear of an AI meltdown is real. At the same time, another camp of investors is praying for more fuel. Fed rate cuts, easier regulation, more M&A, a reopening of the IPO window. But last week's job report was a gut punch. Solid labor growth for September, but unemployment ticked higher. And because this is the first report after the government shutdown ended, traders are treating it as a signal. Now, the Fed is likely to hold rates steady in December. Good news? Not really, because no rate cut means no new liquidity, and liquidity is the oxygen AI stocks need. So what are the big players doing? Well, they're not chasing NVIDIA, they're rotating out. Billionaire Stanley Druckenmiller dumped NVIDIA last year. Now, well, he's quietly loaded up on Alphabet and Meta. Now, remember I said Meta is down 21%? Here's the twist. Meta and Alphabet are the two cheapest names inside the entire Magnificent Seven. Meta has 22 times earnings, Alphabet has 27 times earnings. Now, for context, Druckenmiller ran Duquesne Capital for 30 years with a 30% average annual return and never had a losing year. When Druckenmiller rotates, it's not a gamble, it's a price discovery. Now, he sold NVIDIA because the valuation ran too far. He bought Alphabet and Meta because their valuation upside is bigger from here. Now, let's consider the stocks Druckenmiller bought in the third quarter. Now, he opened a position in Alphabet, purchasing 102,000 shares. The stock is the 44th biggest position of his 65 stock holdings. He also opened a position in Meta Platforms, buying 76,000 shares. The stock now is his 18th largest position. Meta has billions of users across Facebook, Instagram, and Messenger, and a massive ad income. Now, Alphabet's Google Cloud grew revenue 34% last quarter and is pushing AI products harder than anyone. These are long-term compounders with or without short-term volatility. So, should you follow Druckenmiller? Well, if you're looking for discounted AI winners, yes, with discipline, because these aren't hype stocks, they're profitable, cash-rich AI giants with long-term upside. But the key question is price. Meta, current price kissing all-time highs. Do not chase. My range, start small, only 10% position. Add $520 to $540 and go heavy $480 to $500 on a real pullback. Alphabet, a better candidate for light accumulation, but still not cheap enough to chase heavy. My range, start small, 20 to 30% position. Add at $270 to $285 and go heavy at $245 to $260 if the index sells off. Long-term strategy, if you believe in these two over the next 5 to 10 years, DCA 10 to 20% of your planned position side right now and wait for better spots. So stop staring at NVIDIA and add Alphabet and Meta to your watch list now. DCA slowly, diversify all your AI exposure and get positioned for the next real bull wave. I'm Grant. If this video helps you, smash like, save and subscribe for real actionable US market insights. Drop your questions in the comments and I will be there.